Started on chapter 4. So let me share my screen. Please find the materials for chapter 4. All right, so now I start recording the session for you. Very good afternoon, everyone. Today we will finish up chapter 4 on the accounts receivable. Okay, now let's go to the materials on chapter 4. So this is the receivable and the revenue. You may wonder, John, why do we have the receivable? The answer is actually very simple. You would have the receivable when you have uncollected sales, meaning that you earned the revenue already, but you have not collected the money, right? So that's the main reason that you have the accounts receivable. So this chapter would be about the accounts receivable. So over here, we have what we call 5-step model of the revenue recognition. This is actually stated in the TFRS number 15, which is Thai Financial Reporting Standard number 15 on the revenues from contracts with customers. Okay, so let me elaborate on this briefly, but you get to learn it if you are accounting major in full detail in AC412. Okay, so this is just a brief, like overview, big picture of this 5-step model. So first of all, you have to identify the contract that you have with the customers. Okay, once you have that contract, then you look at the obligation that you have to do. Right? What we call here is performance obligation, meaning that these are the things that you have to do for the customers. Like, for example, you may sell the products to the customer, and then you have to also provide after sales services to them for like 1 year, for example, after the sale. So there may be more than just one performance obligation. Right? Like, for example, you have to deliver the products. That is one performance obligation. And then also you have to provide after sales services for 1 year as well. That's another performance obligation. So in one contract, you may have one or more than one performance obligation. And then you have to identify the transaction price that you charge to customers for the things that you will do for the customer. So how much is the price? This is what we call transaction price. And if you have a multiple performance obligation, what you need to do is you need to allocate that transaction price to each and every performance obligation. Like, for example, if you charge 1.2 million, right, for the whole transaction price, then you have to allocate that 1.2 million, the transaction price, right, to each and every performance obligation. Maybe the product, the price of the product is 1 million. And another 200,000 is for after sales services that would last for 1 year. So after you allocate the transaction price, you can then determine whether you have fulfilled an obligation. So if you have fulfilled an obligation stated in the contract, you would then be able to recognize that portion of the revenue. Like, for example, if you have already delivered the products to the customer, then the revenue of 1 million associated with that product sale can be recorded. Okay, so this is what we call a 5-step model in the revenue recognition. And if you have already earned that revenue, meaning that you recorded already, but you have not collected the money, in that situation, you would have the accounts receivable. Okay. Now, for the accounts receivable, there may be chances that you will not be able to collect the amount in full, right? Meaning that you have risk, right? And this particular risk is called credit risk, right? Your customer may not be able to make the payment to you later on because they are, doing not so well financially. So after they buy product from you, after they get services from you, maybe they don't have the ability to pay you back the money. So that is possible. And that is the main topic for this chapter. Okay, so that's the 5-step model. Now, the receivable is actually part of the IFRS or TFRS number 9 นะคะ. So you can say T or I นะคะ is just the same นะ T for the Thai and I for international. So they are basically direct translation of each other. So for the Thai financial reporting standard number 9, we have here financial assets. Okay, so here we have the financial asset. And part of that financial asset is actually the accounts receivable. So the financial assets are subject to the impairment test. Okay, subject to the impairment test. And for this impairment test, we can use a general approach or simplified approach. The simplified approach is actually much simpler, as the name suggests, right? So this is much simpler. So in this AC201, we will be using this simplified approach to determine the credit loss, if any. Okay. So what we're going to do is we will, use the historical default rate together with the forward-looking information. So what do we mean by this term forward-looking information? So let's say that according to what you have recorded in the past, there may be like 8% of the accounts receivable that will not be collected, right? Maybe that's 8%. And then you incorporate the forward-looking information into it. Like, for example, as of now, the economic condition is not so good, right, for Thailand. And the inflation rate is quite high. And there's a lot of problems, resulting from the closure of the country and pandemic and everything, right? So in that situation, even though the past suggests that the default rate is 8%, but now, given the situation is not good for Thailand and specifically maybe for your customers, you may increase that uncollectible rate from 8% to 9.5%, for example. That can be done. Okay, so not only you have to look at the historical default rate, but also you have to incorporate the forward-looking information into your estimation. And after you do the calculation, under this simplified approach, you would then have the expected credit loss. So for the expected credit loss, it can also be called doubtful account expense. Okay, so they are just the same thing. Okay? So whatever terms you think appropriate, you can use them. All right. So from this simplified approach, you use the historical default rate. You use the forward-looking information and then you estimate the expected credit loss. Okay, or in other words, you can call this as doubtful account expense. They are just the same thing. Okay? So two different terms that you can use interchangeably. All right. Now let's move along. Like I said, there are general approach. Sorry. Okay, so there are general approach, and also there are simplified approach. So what you're gonna do is, let me highlight. Okay, you get to learn this in great detail if you are an accounting student, which I don't think you are, right? So for this section, right? For this section, from what I know, the program, the BBA program informed me that all of you, right, are in marketing. Would that be correct understanding? ใช่ไหมคะ? Yes. The BBA program informed me that all the students register for this section. You are all marketing major. So if you're a marketing major, then you don't have to deal with this kind of thing. But for this AC201, for this AC201, I will be using this. So I will be using this loss, determined by simplified approach. So it is much simpler model. So that would be the things that we will be using in this chapter. For the rest of it, Okay, for the rest of it, you are not responsible for them. For the accounting student, I think they get to learn this in great detail in AC412 นะคะ Advanced Accounting 2. All right. So we will move along with the simplified approach, right, for the trade receivable. Okay. As I said, for this, TFRS or IFRS, they are just the same. Now, whatever you want to refer to, the standard IFRS or TFRS. So they are basically direct translation of each other. So over here, when you present the accounts receivable on the statement of financial position, you will need to present the amount at its net realizable value. So you may wonder, what is this net realizable value? Okay, so what is this net realizable value? The net realizable value can also be called, in short, NRV. So what exactly is this NRV? It is actually estimated. So it's not actual number, all right? Estimated collectible amount. So how much do you think, right? How much do you think you will be able to collect the accounts receivable in the future? So that is net realizable value, which is estimated number. So how do we do the calculation? We take the accounts receivable at its gross amount, meaning total. So when we say gross, we mean total. So we would take the gross amount of the receivable, which is total, and then subtract that by the allowance for doubtful account. This allowance for doubtful account can also be called okay. So this allowance for doubtful account can also be called allowance for credit losses. Same thing, same thing. So whatever you want to use, you may use the term allowance for doubtful account or the allowance for credit losses. So basically, this is the estimated amount, right? You take the accounts receivable total, and then you estimate the amount that you think you will not be able to collect in the future. So that is basically credit losses, okay? There are two accounting recording systems. The first one is called direct write-off, which is for income tax purposes. And another one is called the allowance method. This is for accounting purposes. Okay, so direct write-off is for income tax purposes, and the allowance is for the accounting purposes. So at this point in time, I want to tell you the differences between accounting and tax, right? Accounting and tax. So for the accounting and tax, there are like two different things. Some of the people think that they are the same thing. They are different. Accounting is one thing and then tax is another. So when we do the calculation for the income tax, we have to use actual number. The revenue department would not accept anything that is that are estimated. They don't believe in estimation. So for the bad debt expense, right? Bad debt expense, how do they charge the expense called bad debt? The company must know exactly, and the company must be certain that the company will not be able to collect the receivable out of these customers. Like, for example, the customer has died and he left out no money for his or her kids, meaning that we would not be able to collect anything out of that receivable. Or the customer may be bankrupt. So if the customer goes bankrupt, then you will not be able to ask for any payment because they don't have anything to pay, right? Or the customer may just went missing, legally missing, right? So you will not be able to collect anything from that customer. That would be the revenue department announcement of things you have to do in order to be able to claim a bad debt expense as tax deductible expense. Okay, so you have to go through all these steps, right? You have to do everything you have to do in order to make sure that you will not be able to collect the receivable from that particular customer. So there will be a list of things, right, that you have to do according to the tax law announced by the Revenue Department. So if you go through all those process, including, file bankruptcy lawsuit against the company, and then the court has final say that the customer has gone bankrupt already. So if you go through all those, requirements, you can then charge the bad debt expense as tax deductible expense, right? So there's no estimation of any kind. That is for tax purposes. So it's called direct write-off. Now for accounting, we have a lot of estimation, right? From what you have learned before, right? You know that there are a lot of estimation involved in accounting. So if we think, right, if we think that we will not be able to collect the money, we can then subtract out the expense in accounting. So accounting allow the estimated expense, but for the tax, none allowed. Okay, so there would be differences, if you are doing the tax calculation or if you are doing the accounting calculation. And the main focus here is of course accounting calculation. All right. So now let me show you the direct write-off, which is more to the income tax calculation. So this is what happened, นะคะคุณหนูนะ this is what happened. In year one, all right, in year one. Okay. So over here in year number one, the company has recorded the sales revenue. Okay, so this is a sales revenue earned by the company. Okay. Now, the company has earned the revenue in year one, and then since the company has not collected the money, the debit wouldn't go to the accounts receivable. And then during this year one, what the company will do is the company will try really hard to collect money out of that receivable. And if they can do that, then it's going to be debit to cash and credit to the accounts receivable. All right. Now, let's say that later on in next year. Next year, what happened is the company would then realize that let's say one of the customer has just gone bankrupt because of the court final ruling. So in that situation, if the customer owed us, let's say 1 million, we would then have to record here, bad debt expense for 1 million. Okay, bad debt expense for 1 million. And then we will then write off the accounts receivable from that particular customer, let's say Mr. A, directly. Okay, so for this particular case, we will then write off the accounts receivable from Mr. A directly. That's why it's called direct write-off. The term write-off meaning delete, meaning reduce, meaning take out, right? So over here, we directly write off the accounts receivable from that Mr. A. As soon as we know the fact that Mr. A will not be able to pay, and that is in the year 2000X2. So the problem here is that, okay, so the problem here is that the company has the expenses here, right, in year two. The company has expense in year two, but the revenue is in year one. All right, see that? So what happened is we have here mismatching problem. Okay, we have mismatching problem. So what is this mismatching problem? You record revenue in year one, but you record expense in some other years, right? And the expense here is closely related to the revenue. They should be recorded in the same period. Okay? But here in this case, they are in the different period. So we don't really like this in accounting. All right. So with this problem of mismatching, we will not use direct write-off in our recording. Okay, so what we're going to use is this one, the allowance method. So this is for accounting. So do you have any questions on the method number 1 for the direct write-off before we move along to the method number 2 on the allowance? Okay, so there's no questions here. Hopefully, yes. All right. So if you don't have any questions on this direct write-off, then let's go to the method number 2, which is the allowance. So what happened is, everyone, what happened is, in year 1, right? In year 1. Okay, so what happened is in year number 1, you record the revenue. Okay, you record the revenue and you have not collected the money. So over here, you have the accounts receivable recorded. So what you're going to do is you will try really hard to collect the money out of the accounts receivable, right? So if you can collect, then it's a debit to cash and credit to the accounts receivable. All right. Now, at the end of year 1, same year, see that? At the end of year 1, okay, end of year 1, the company would then estimate the doubtful account expense, or in other words, we can call this as the expected credit loss. Okay, same thing, all right? So you can call this as expected credit loss. Okay, so this is, this is the expected credit loss. Okay, expected credit loss. You can also use the term interchangeably. Now, doubtful account expense or expected credit loss, or just credit loss. Okay, so whatever you think appropriate in terms of the account title. But the thing is, this is estimated. So the issue is, why do you need to estimate the amount? Why? All right, that is very important question. Why do we have to estimate this doubtful account expense or the expected credit loss? The reason is, you want to match the expense with the revenue. Okay, so let me show you this. Over here, you have expense recorded in year 1, right? And over here, you have the revenue recorded in year 1. See that? Expense and the revenue that are related should be recorded in the same year. Same year, right? Same period. Without the revenue, then you would not have doubtful account expense. So the doubtful account expense or the credit loss is closely related to the sales revenue, right? So we want to record them in the same period. So this is matching. So this is matching, all right? So this is matching. So in accounting, we love the matching concept, right? We love the matching concept. The revenue and the related expenses should be recorded in the same period, okay? So if you use the allowance method, then you can match the related expenses in the same accounting period as the revenue. So as you can see over here, right, expense is in year 1 and also revenue is in year 1. So that's the reason why you cannot wait until you know for sure that, Mr. A will not be able to make the payment. So at the end of the year, what you need to do is you need to make the estimation. so that you can record the expense in the same accounting period as the revenue, so that you can match the expense with the revenue. All right, you cannot wait because you want to match the expense with the revenue in the same period. เชิญค่ะ เมื่อกี้ใครถามแทรกขึ้นมาคะ
just one question in the chat box ครับอาจารย์
which I have already answered that. Is that correct?
Not sure, but if yes, then that's fine ครับอาจารย์ครับ one more thing from my side.
When I ask whether you have the questions for the direct write-off, you keep silent นะ ใช่ไหม and then when I move along to the second method, then you ask questions about the first method. Okay, so have I answered your question on that? What is mismatching problem and what is matching? Have I answered that? One more time. Here for this, the revenue is earned and recorded in year one. Is that correct?
Yes.
Okay, and then you wait until you know for sure that Mr. A has gone bankrupt, and then you record the associated expense, which is bad debt expense, so-called, right, bad debt expense. So for this particular case, when do you record the bad debt expense?
The next year.
Which is some other years, right? Not in the same year. May not be the next year, right? Maybe year 3, year 4, year 10, whatever the year is. But the thing is, it's not in the same year. Is that correct?
Yes.
Okay, all right. So if it's not in the same year, it means that you record revenue in one year and then you record expense in some other years. So do we love that in accounting?
No.
Why so?
We want to record the revenue and expense in the same period of time, in the same years specifically.
Why so? Why so? Why is that? Why we want to record revenue and expense in the same year? Why can't the revenue be in one year and expense be in some other years? Why don't we like that? All right, we don't like this to happen because if this happened, then the profit would mean nothing. Am I right? You record revenue in one year and then later on, whenever you feel right, then you record the expense. So if the revenue and the associated expense are recorded in different period, then the profit figure would not be meaningful. Am I right? The profit figure would not be meaningful if the revenue is recorded in one period and then later on, whenever you feel you want to record expense and you record it. So if that's the case, then the profit figure would mean nothing. So in accounting, we don't like this to happen. If you record revenue in one year, the related expenses must be recorded in the same year. So we want to match the expense with the revenue. Like for example, if you still remember the depreciation case. For the depreciation case, if you make use of the machine, right? If you make use of the machine and you earn the revenue, you have to record depreciation expense in that same period so that the expense, related to the revenue is recorded in the same period. So if that's the case, then the profit figure will then be meaningful, right? So in accounting, if you have the related expense, you have to record that in the same accounting period as the revenue. Now, if you look at the second method, which is the ones that we will be using for accounting. For this, when do you record the revenue?
In the same year.
When do you record the revenue? Which year is it?
2000X1.
All right. And then later on, at the end of the year, what did you do?
We also record the expense.
How to record the expense? Do you know the actual number at the end of that year one? Do you know that Mr. A will go bankrupt next year? Do you know that Mr. B will die next year? Do you know that Mr. C will be like missing in year number 4? Do you know that fact? Do you know that fact?
Yes, we
Can
made
you predict? Can you predict that someone will die later on?
no,
Can you predict that someone will be bankrupt? Can you predict the future? Not really, right? You don't know that fact. Am I right? Do you know the fact at the end of this year that Mr. A will go bankrupt next year? Do you know at the end of year one that Mr. B will die next year? Do you know at the end of year one that Mr. C will be missing, in year three? Do you know that future event?
no ครับ
No, you don't, right? So you don't know the future. So how do you record expense in the same period as a revenue, given that you don't really know what will happen in the future? So here in this case, that's the reason why you have to estimate the amount. All right. So that's the reason why that you have to estimate the amount. Simply because you don't know the future and you don't want to wait until that, future event occur. Okay. So over here, everyone, you record revenue in year one, and then you estimate the expense at the end of year one. What is this estimation? You estimate the amount that you may not be able to collect in the future. Is this actual? No way. You don't know, right? The exact amount. So that's the reason why you have to record the estimated expense here. In accounting, we allow the estimated expense. We allow that, right? We allow estimated expense to be recorded. So over here, the estimated expense, which is called credit loss or doubtful account expense, is recorded in year one. Do you see that here the revenue and expense are recorded in the same period? So do we have problem? Do we have problem? Over here, do we have any problem concerning matching?
no
No, we don't, right? Because we record the revenue in year one, and then we record the related expense in the very same year. Now, everyone, you may wonder, Ajahn, why this is related to the sales revenue? Let me ask you a question. Without the sales revenue made on credit, would you have the accounts receivable? Yes or no? Without the revenues made on credit, would you have the accounts receivable?
no we don't
No, right? Without the receivable, would you have the doubtful account expense?
no
No, you don't, right? So can you see that direct link? Without the revenues, you would not have the receivable. Without the receivable, you would not have doubtful account expense. So the doubtful account expense here closely related to the sales revenue. They are closely related, right? So without the revenue, you would not have the accounts receivable. Without the receivable, you would not have doubtful account expense. So the doubtful account expense closely relate to the revenue. That's why we want to record them in the same year, right? We want to record them in the same year. So here we cannot wait until we know for sure, right? That the customer will not be able to make the payment. So that's the reason why this amount must be estimated, because you don't know the exact amount. So this is actually the estimated amount, estimated. Now we cannot wait, we cannot wait until we know exactly. Because if we wait, then we would then have mismatching problem, like in this case, right? So if we like keep waiting until we know for sure that the customer will not be able to make the payment, then we would have the mismatching problem. Okay, and we don't want that to happen in accounting. So over here, you would need to record the estimated expense at the end of every year. And this is actually part of the adjusting entries. So this is part of the adjusting entry. So this is part of the adjusting entry at period end, all right? So at the end of each period, you need to estimate this expense and then record the estimated expense so that the expense can be matched with the revenue in the same year. And if you do this, then your profit wouldn't be meaningful. All right. Now, for the credit, right? For the credit, can you delete anyone's account receivable? So should you delete anyone's accounts receivable? What do you say? Should you delete, the accounts receivable from Mr. A? Or should it be the accounts receivable from Mr. B? Or should it be the accounts receivable from Mr. C? What do you say? Do you know who will die? Do you know who will go bankrupt? Do you know who will not be able to make the payment in the future? Do you know who?
We never know.
We don't know, right? So that's the reason why we cannot have direct write-off here. Unlike this case, right? Unlike this case, you write off, for this case, right? You write off the amount of the receivable from Mr. A because you know exactly that it's going to be, it's Mr. A, right? That has gone bankrupt. But for here, since you recorded with the estimated amount, meaning that it's just the estimation. You don't really know whether it's going to be Mr. A, Mr. B, Mr. C, Mr. D, or who, right? That will not make the payment to you in the future. So this is why you cannot have direct write-off, but rather you have to use the allowance method. Okay? So the term allowance, what is it? Allowance. This allowance can also be called allowance for doubtful account or the allowance for credit loss. Whatever you feel like, they are just the same thing, okay? Allowance for doubtful accounts or the allowance for credit losses. So this allowance for doubtful account or credit losses is a contra asset. So if you still remember the term contra asset, so let me share with you the concept of the term contra asset. For the term contra asset, everyone, if you want to do the calculation for the net realizable value of the receivable, you would then take the accounts receivable, all right? And this is the total amount or gross amount. And then you minus that by the allowance. Okay, you minus that by the allowance. So for this allowance, the more allowance you have, the less net realizable value will be. So this allowance would then be called contra asset account. Okay. So if it's contra asset, all right, if it's contra asset, the normal balance would then be on the credit side, all right? So the normal balance is on the credit side, not credit. Okay, so the normal balance here is on the credit side. The reason is that we call this as contra because we subtract that out right from the asset. Contra means subtract. Contra means subtract. Okay, so you may wonder, John, what does it mean by the net realizable value then? What is it then? So after you do the calculation, this net realizable value is actually estimated collectible amount. So it is the amount that you think you can collect, all right? The amount that you think you can collect, all right? So this is the net realizable value of the receivable. You take the receivable and then you subtract that out, you subtract the allowance out of it, okay? So any questions here for this recording? Debit to the doubtful account expense, and this is estimated because we cannot wait until we know for sure. Otherwise, we will have a mismatching problem. So at the end of every period, we have to estimate the amount of the uncollectible and recorded that as an expense. And that expense would then be matched with the related revenue in the same year, in the same period. And since we don't know who will be, at default, so if we don't know who, we cannot directly write off his or her accounts receivable. So what we need to do is we need to set up the account called the allowance for doubtful account or the allowance for credit loss. And this allowance is a contra asset account. Okay, so any questions on this particular entry? So any questions on this entry? All right, so if not, then move along to this one, right? Then sometime later, then you realize that maybe, one of your customer maybe just die or go bankrupt or went missing. So sometime later, it may be year 2, it may be year 3, it may be year 10, whatever the case is. So sometimes later, you then realize that Mr. A has gone bankrupt and will not be able to make the payment. So if that's the case, then you have to write off his accounts receivable. So this is the accounts receivable specifically, the ones that belongs to Mr. A. Okay. So Mr. A has gone bankrupt. You know for sure that Mr. A will not be able to make the payment. And this is the actual number. Okay, so this is actual, meaning that you know exactly the amount that Mr. A owed you. And you know exactly the amount that will not be collected. Okay. Now, at the time that you write off, this is called write off,นะคะ. So this is write off, meaning delete, meaning reduce, write off. At the time that you write off Mr. A accounts receivable, you have to at the same time reduce the balance of the allowance. Okay, so the allowance balance will be reducing if you know for sure that the customer will not be able to make the payment. So at the time that you write off his or her accounts receivable, then you reduce the balance of the allowance that you recorded earlier in the prior period. So if you look at this allowance, what I want you to see is that the allowance will be increased with the estimated expense, and the allowance will be decreased with the actual expense. Okay? So allowance will be increased with the estimated expense, and the allowance will be decreased with the actual write-off. So this is increase, this is decrease. Okay? Increase with the estimation and decrease with actual number. All right. Now, this is the adjusting entry at the end of the year, and this is a write-off entry in the next year, depending on whenever you know for sure. Okay. Now, any questions up till here? Any questions up till here? So let me recap one more time, right? Let me recap one more time. This first entry is when you have made the sales on credit. And this entry is when you collect the receivable. And then at the end of the year, you have to estimate the amount that you may not be able to collect in the future. And then record doubtful account expense or expected credit losses. And since you don't know who will be uncollectible, right? So you cannot directly write off his or her accounts receivable. What you're going to do is you will set up the allowance to keep track on the estimated expense that you think will be uncollectible. And then later on, when time passes, maybe in year 2, year 3, year 4, or whatever the time is, all right, whenever. When you know for sure that your customer will not be able to make the payment, so let's say it's Mr. A. you would then at that time reduce or write off Mr. A accounts receivable. Write off meaning delete, meaning reduce, meaning take out. You take it out, you delete it, you write off it. So over here, you write off the accounts receivable that belongs to Mr. A. And then at the same time, you reduce the balance of the allowance account. So if you look at the allowance, the balance is increasing with the estimated expense, and it will be decreasing with the actual write-off. Okay, so any questions up to this entry?
Just maybe one question. So the doubtful account expense is estimated at the end of the year always?
Yes. It depends on whether you are preparing quarterly report as well or not. If you also prepare the quarterly report, then you have to estimate that at the end of the quarter as well, right? Whenever you prepare the financial statement, let's say. So whenever you prepare the financial statements, then you have to estimate the amount of the uncollectible accounts.
And the allowance for doubtful accounts, that's a contra asset account, right?
Yes, it is. Contra asset, correct.
Okay, and the last entry depends basically, because it can be that we also estimate the doubtful account expense to be higher than it actually is, right?
It can be higher, it can be lower. Doesn't really matter, right? It could be we may be we may have the estimated expense, or we may have underestimated expense. Doesn't really matter.
But we still put it as an expense for the same year, and so our revenues and profits are decreased. Our profits are decreased.
Yeah. Hela, there's no way that we know exact amount, right? So we have to estimate. And when we estimate, we have to accept the fact that sometimes it may be overestimated, sometimes it may be underestimated, right? So that's normal. Agree on that? There would be no way that you would, estimate exact amount every time, right? You are not like psychic, yeah? ถูกไหม? You are not psychic, so you don't know the future. So there's no way that you would make the estimation right at the amount of what will happen in the future. So when we say estimate, we have to accept that there may be overestimated in some of the years, and there may be underestimated in some of the years, right? That is normal, that is common, right? And we have to accept that, right? So for the estimation over here, sometimes we overestimate the amount and sometimes we underestimate the amount. That is okay, that is normal, okay? So it is true that if you overestimate the expense, then the profit wouldn't be lower, right? So that is the correct understanding. Okay, Hela?
Okay, thank you.
All right, so it's correct understanding you have. So if you overestimate expense, then the profit wouldn't be lower. All right. Next, let's talk about these two entries. Okay, so these two entries are not really common. Let me explain it you this way. Let's say that in year number 2, okay, let's say that in year number 2, you realize that Mr. A has gone bankrupt because the court has its final ruling. Stated that Mr. A, you have gone bankrupt already, you have no asset remaining, and you cannot pay off the debt, right? So that's final court ruling on Mr. A. So when we realize that Mr. A has gone bankrupt, we then write off his accounts receivable. So let's say it's 1 million, okay? So over here is going to be debit to the allowance 1 million and then credit to the receivable for 1 million, all right? Now later on, Let's say next year, what happened is Mr. A has won 30 million baht lottery, and Mr. A wanna pay off the old debt. So let's say this is really odd, and this is not often that you have this case. So let's say that later on, Mr. A, who has gone bankrupt already, won 30 million baht lottery and want to pay off the old debt. So if Mr. A comes back to you and say, hey, company, I want to pay you back the 1 million. I feel sorry that I don't have the money at the time, but I do have money now. So can I pay you 1 million? I want to pay off the old debt. Now I have money. So if that's the case, then what you have to do is you have to reverse the write-off entry. So this is what we call undo, undo, right? So over here you record debit, right, to the allowance. When you reverse the entry, when you undo it, when you undo the impact or reverse the entry from this debit, then you should record credit to it. See that? And for this credit, then you should record debit to it. You reverse the entry. So after you reverse the entry, you basically undo the impact of the write-off. So let me write it for you over here, right? So if you record this, basically you undo the impact of the write-off. You undo the write-off. You undo the write-off, or you reverse the entry. Okay, you undo the write-off or you reverse the write-off. Now, if you reverse the write-off or undo the write-off, you can then collect the money from that Mr. A for 1 million. Okay, so this is not really that often that you have this situation, right? I mean, you write off the debt already, and then the customer comes back and it surprises you that, oh, okay, Mr. A, you want to pay off the old debt. So thank you for that, and then we record this undo of the write-off, and then we record the collection. Okay, so this is not going to be, happening that often. Okay, we rarely see this case. Okay, so this is quite rare, quite rare. Okay.
If we underestimated the doubtful, the allowance for doubtful accounts, then when ตอนที่ allowance in แป๊บนึงนะคะตอนที่ allowance
let's say this คุณวิภาวี let's say this. Sometimes you overestimate, sometimes you underestimate. It's okay, it's normal, right? And then we have the way to take care of it. Okay, so if you underestimate the expense in the prior year, then this year you increase the amount. If you overestimate the expense in the prior year, then this year you reduce the amounts. So it's okay and common to overstate or understate, right? So don't worry, because there's no way that you know exact amount, right? There's no way that you would know the exact amount. Okay, because it's something that has not happened just yet. Okay, so sometimes you overestimate the expense, sometimes you underestimate the expense, and you can make the adjustments in the following year. So don't worry.
So the allowance for doubtful accounts can be like negative ใช่ไหมคะ
We have the way to take care of that. But if you are asking whether at the end of the period, will the balance be negative? The answer is no. But during the year, there may be the case that you have negative balance, and then we have to take care of that problem. Okay? Right. Now, let's take a look at the recording here closely. Okay, all right. So let's say that you record this entry, all right? You record this entry. So this entry is part of the adjusting entry, all right? Let me put this again to restate it one more time. So this is part of the adjusting entries at period end. Okay, so this is part of the adjusting entry at the end of the period. And you are recording this, doubtful account expense at the end of the year, okay, or the end of the period. So what happened is, if you want to match the expense in the same period as the revenue, you cannot wait until you know for sure, right? You must, calculate something, right? Some amount. And this is from past experience. This is from forward-looking information. So this is actually estimated. So this estimation wouldn't be recorded as the expense. Okay, so this one will be recorded as expense. So let me bring this along to here. So the amount here that you record is actually estimated. Okay, so the amount that you recorded here is actually estimated. Okay, and not only you have to record the increase in the expense, but also you have to record the increase in the allowance as well. So this is also estimated. Okay. Okay, so this is also estimated. So you can see over here that the expense is the estimated amount. And when you estimate the expense, the allowance would be increasing. All right, now let's continue on with this. Okay. So now when you record the write-off, okay, so this is the write-off. Right? So when you record the write-off of the receivable, when you record the write-off of the receivable, what happened is you will have to reduce the balance of the allowance, right? So over here, the allowance will be decreasing because of this. So this is actual. Okay, so this is actual. So you can see that, right? You can see that the allowance will be increased with the estimated number and will be decreased with the actual number, increase with the estimate and decrease with the actual. Okay. Now, so this is the same thing,นะคะอันนี้นะ. So this one and this one is just the same thing. So let me hide this,นะคะ. They are the same, okay? Now, when you write off the receivable, you have to reduce the balance of the receivable by the actual number here, right? So this is the reduction, okay? So this is the reduction. Okay, recap one more time. If you look at the allowance, this is contra asset. The contra asset will be increased with the estimated expense and will be decreased with the actual AR write-off. Okay. Now, for this accounts receivable, the accounts receivable will be increased with the credit sales. So when you made the sales on credit, then the accounts receivable will be increasing. And whenever you collect the money, right? Then the accounts receivable will be decreasing. And another reason would then be when you write off the accounts receivable, the accounts receivable will then be decreasing as well. Okay, so from this understanding, I would then write down the calculation. So let's take a look at the calculation of the allowance. You're starting out with the beginning balance. Okay, so this is the beginning balance. And then you add the estimated expense. and then you subtract the actual write-off. Then you would have the allowance at the end of the year or end of the quarter, whatever the case is. Okay? Now for the calculation of the receivable. You starting out with the beginning balance of the receivable, and then when you made the credit sales, then you have more of the receivable, right? And when you collect the money from the receivable, then you have the reduction in the receivable. And then, when you write off the actual, loss, then the accounts receivable would then be reducing. So this is the ending balance of the receivable. Okay, so hopefully you understand the calculation of the allowance and the calculation of the AR. Okay, so any questions on the calculation? Because it's very important that you understand the calculation of allowance and the calculation of the AR. Because this AR, right, wouldn't be subtracted out with the allowance to get the NRV. Okay. Recap one more time, right? NRV is determined by the receivable minus the allowance. So you have to know the receivable here and you have to know the allowance here, okay, so that you can do the calculation for the net realizable value.
Could you repeat what the net realizable value then means or what it does? Like. Okay.
So let me go back to the this นะคะ I have already talked about it นะ เห็นละนะ So this is the net realizable value. It is actually the estimated collectible amount, and you can calculate this by taking the total receivable and then minus that by the allowance. You can call this as allowance for doubtful account or allowance for credit losses. They are the same. Would that answering your question, Hela?
Yes. Yes.
Okay. All right. All right. So over here, we need to know the allowance. We need to know the AR so that we can do the calculation for the net realizable value. Okay. So any questions on the calculation here? All right. If not, then let's move along to this example. When we say estimation, all right, when we say estimation, we have basically two methods here. The first one is called percentage of the receivable, and the other one is called aging of the accounts receivable. Okay, so these are the two methods of calculation. So I will be starting out with the percentage of the receivable, and when we are done, I will give you the break. And then you come back after the break for the aging. Okay, there are two methods. All right, so let's starting out with the first one. For this, I will be using, let's say 4 different colors. All right, so I'll be using 4 different colors when I show you this example. So the first color is gray. So this is basically information given or calculated amount. And then when I use blue, right, usually it's the calculation of the allowance for the doubtful accounts or credit losses. And then when I use green, it would be for the accounts receivable write-off. And then when I use red, that would be the amount of the expense that you have to, calculate it. All right. Now, with this meaning, let's starting out with the information given. Over here, you have the information given for the sales revenue in year 1, year 2, and then year 3. And then together with that sales revenue, you are given with the accounts receivable at the end of year 1, end of year 2, end of year 3. And also over here, you know the actual write-off of the accounts receivable during year 1, year 2, year 3. So this is when the customer, has gone bankrupt, customer has died, or customer has went missing. So you write off his or her accounts receivable when you know that fact. Okay, so this is actually given to you. Now, for the method number 1, everyone look at this, please. The company is using 8%, right? 8% of the receivable as the uncollectible percentage. So you may wonder, John, how do we get the 8%? Right? How do we get the 8%? How do we know that 8% will be uncollectible? Like I said, you look at the past experience, right? You have the accounting records, you have database, you have information in the past periods. So you do the calculation, all right? Maybe you get like 7.5% from the past information. So 7.5% will be uncollectible if you have the accounts receivable of 100 baht. And then you incorporate the forward-looking information into it. Like for example, nowadays the economic condition is really bad. We are turning to a depression period, and there would be a lot of impact, right, on businesses because of the pandemic and the government policies. So if that's the case, then even though the past experience is 7.5%, but you can increase it to 8% if you think it's appropriate, right? So this 8% is from past experience, okay, together with forward-looking information. When we say forward-looking information, we can refer to this as forecast, right? So you look into the future and then you say, oh, customer is not doing well financially, and the government policy and subsidies would not do much in terms of the help, right, to the customers of your company. So for that, you can then increase the uncollectible percentage, right, from the 7.5% based on your past experience to 8% here, right? You can do that, okay? So this is estimated. So the uncollectible percentage of 8% will be taken to here. And then over here, from the information given, you can see that the balance of the receivable is 1.35 million. Okay, 1.35 million. So here, if you take 1.35 million and then multiply that by 8%, what do you get? Okay, so let me move it up, okay, over here. If you take 1.35 million, which is the accounts receivable given, and then multiply that by the 8% uncollectible percentage based on your past experience and forward-looking information. So if you do the calculation over here, you would then get the balance of the allowance for doubtful accounts. Okay, so if you do the calculation, the result of the calculation is the balance of the allowance that you want at the end of the year. So over here, at the end of the year, you expected that you will have uncollectible percentage of 8% of the receivable, and it's 108,000. So it's 108,000 taken to here, the ending balance. Now, in terms of the beginning balance, do you have anything? The answer is no. Why so? Because this is the first period. Okay, so if this is the first period, then you don't have anything at the beginning. All right. And in terms of the write-off, according to the information given, you don't have any write-off. Okay. So if you don't have any write-off, actually for this entry, you don't really need to record anything. Okay, so you can see no entry. Okay, no entry because there's no write-off. Now, let's take a look at this allowance. All right, let's take a look at this allowance. Originally, you're starting out with the beginning balance of 0. and then you reduce the balance because of the write-off for 0, meaning none, right? You don't have any write-off. So basically now you have 0, right? You're starting out with 0 and then you reduce the balance by 0. So right now, what is the balance that you have? Right now you have 0. But at the end of the year, what do you want? Right now you have 0. See that? Right now you have 0. But at the end of the year, you want the balance to be 108,000. So my question to you is, what will be the amount of the increase that we should record? So what would then be the amount of the increase that we should record here? So that at the end of the year, we have what we want, which is 108,000.
We should record of 108,000.
Okay, so it's going to be 108,000. All right. So this 108,000, what is it? This 108,000 is actually estimated expense that will increase the balance of the allowance. Okay. So over here at the end of the year, as part of the adjusting entry, so you have to record the estimated expense, all right, at year end, let's say. Okay. So this is the AR write-off. During the year. So this is actual this is actual so this is actual AR write-off during the year. So this is actual AR write-off during the year, and this is estimated estimated expense at year end. Okay. So for the estimated expense that you have to record at the end of the year, it's debit to doubtful account expense or expected credit loss, and then record credit to the allowance for doubtful account or the allowance for credit loss. All right, so any questions here for the calculation and the recording? All right. Now let me move it up and then show you the amount that will be presented on the financial statements. This expense, all right, will be presented on the statement of comprehensive income. So over here, you would have the expense for 108,000, and for the allowance for doubtful account. The allowance for doubtful account is the contra asset, so it will be subtracted out from the asset. Sales revenue and the accounts receivable will be from the given information. So if you look at the given information, right, you will then see, okay, so if you look at the given information, you would then see that the sales revenue in year 1 is 6,785,000. And also here from the given information, the accounts receivable is 1.35 million. So you subtract 108,000 from it, you would then have here the net realizable value. Yeah, so this is the net realizable value. Or you can say นะคะ NRV นะคะ same thing นะลูกนะ same thing นะ NRV, alright? Okay, NRV or the net amount of the receivable นะคะ net amount of the receivable. So this is a year 1 calculation นะคะ year 1 calculation. Any questions for the year 1 calculation? All right, so have you finished up with the notes? If yes, please let me know so that we can go to year number 2. So let's say that if you finish up with the notes here, type in 1 because this is year 1 นะคะ year 1, all right? Okay, so this is year 1. And then we move along to year number 2, all right? Year number 2. Okay, so any questions here for year number 1, and have you finished up with the notes? Okay, done with year 1, everyone, yes? Do you need more time for this? Anyone need more time on this year 1? If not, then I will move along to year number 2. All right. Now, for year number 2, again, same, same color system that I will be using. Okay, same color system. So let me delete this because you know it already. All right. So for this year number 2, from the information given, we know that the accounts receivable is 1.48 million, 1.48 million. And over here, you estimated that 8% of the receivable will be uncollectible. Now, so this 8% can be changed, depending on past experience, and also forward-looking information. So this 8% can change, all right? But for this example, let's keep things simple and say that we want to use just the very same number, which is 8%, right? 8%, okay? Now, if you take 1.48 million and then multiply that by 8%, what you're going to have is the ending balance of the allowance that you want. So from this calculation, the allowance balance that you want at the end is 118,400, okay? 118,400. So from this calculation, the result that you're going to get would then be the balance of the allowance, okay? The balance of the allowance. Okay. Now, hopefully you finish up with year 1 already so that I can move it up, okay, so that you can see more of the year 2, okay? More of the year 2. So over here, from the calculation, you take 1.48 million and then multiply that by 8%. So you're going to get here 118,400. Okay, so this 118,400 is the balance of the allowance that you want to have. All right. Now, let me ask you a question. Do you have any beginning balance? Yes or no? If yes, how much? Do you have any beginning balance in the allowance? If yes, how much? Okay, do you have any beginning balance? If yes, how much is it? Do you have any allowance from the prior year? Do you have any allowance from the prior year?
108,000.
Okay, all right. So from the prior year, right, you already have this 108,000 estimated. Okay, 108,000 estimated, all right. And according to the information given, do you have any actual write-off during this year number 2? Do you have any write-off during this year number 2? How much of the write-off in year number 2? How much is it in the information given? Have you written off any of the accounts receivable in year number 2 according to the information given?
100,000.
All right, so you have already written off, right, 100,000 of the accounts receivable based on the information given. So the entry that you have to record would then be debit to the allowance, credit to the accounts receivable of that specific customers, whoever the case is. Okay, now everyone look at this, please. Originally, you have the estimated expense from the prior year, right, of 108,000. And then you reduce the balance because of the actual write-off for 100,000. So here in this case, you overestimate the expense in the prior year. Am I right? You overestimate the expense in the prior year. Is that correct, Kun Vipavi? Is this correct, Kun Vipavi? Is this correct? You overestimate the expense in the prior year because in the prior year you think that it's going to be 108,000, but in reality it's only 100,000. So you overestimate the expense in the prior year. Am I right?
Yes.
Okay, all right. So I want to show you that it's okay, right? It's okay to overestimate or underestimate. This is normal. This is common, right? So you overestimate the expense in the prior year. So now, after you reduce that 100,000, how much do you have? You're starting out with 108, correct? You're starting out with 108, and then you reduce the balance by 100,000. So after you reduce the balance by 100,000, how much do you have remaining in this account? Kun Vipavi, how much is it that you have remaining in this account? You're starting out with 108, right? And then you reduce the balance by 100. So how much do you have remaining?
$8,000 ครับ
Okay, so we have here 8,000. But at the end of the year, how much do we want to have? So now we have 8,000. So at the end of the year, how much do we want to have?
118,400.
Okay. So if that's the case, then how much more do we need to record of what we want? How much more do we need to record? Given that right now we have only 8,000, but at the end we want it to be 118,400. So how much more? So how much more do we need? How much more do we need?
110,400.
Okay, so what is that amount? 110,400. What is it then? This is, how do we call this number? 110,400. What is this number? How do we call it? It is our. What is this number? Is it the 110,400? What is this number? What is it, Kat? This number, how do we call it? 110,400?
Estimated doubtful account.
Very good. It is actually estimated doubtful account, right? And when you record that estimated doubtful account, you would have to also at the same time increase the balance of the allowance. Okay, very good. So that is correct answer. This account 110,400, it is your estimated expense. All right. And when you record the estimated expense, the allowance would be increasing. So now you take the note here, please, for the calculation and also for the entry. All right, so hope that you finish up with the notes here. So let me show you the numbers that will be presented on the financial statements. So this expense will then be presented on the statement of comprehensive income. Okay, and the allowance at the end will be presented on the statement of financial position. And for the sales revenue and the accounts receivable, you are given with that information. So for this calculation, the NRV amounted to 1,361,600. So when you are done with this นะคะ you continue on year 3 นะคะ work on year 3 work on year 3 and then type NRV at year end in the chat. Okay. If you finish with the notes here, you work on year number 3. Hope that you can do it now. And then whenever you get the answer, you type in the NRV at the end of year 3 in the chat, please. Okay, I give you 5 minutes on this. 5 minutes. Now you type in the answer in the chat whenever you are done, and then I will show you the solution, all right? Okay, 5 minutes on year 3 and then type in the NRV at the end of year 3 ค่ะ ได้คำตอบแล้วพิมพ์มานะคะ So whenever you get the NRV at the end of year 3, you let me know. Type it in the chat, please. All right, so some of you have put in the answer already. So let me show you the calculation on the screen for year number 3. So from the information given, you know that the accounts receivable at the end of year 3 is 1,525,000. And again, you estimated that 8% of this will be uncollectible. As I said, this 8% can be changed, no worries. I mean, if you think that 8% is no longer appropriate, then you can change it to some other percentages, okay? Now, if you do the calculation, the result that you get is actually the ending balance, right? Okay, so the ending balance of the allowance that you want to have from this calculation, right? You get the ending balance. So from this calculation, you get the ending balance and it's 122,000. At the beginning of the year, you already have 118,400. Where do you get this number? This number is actually carry forward, right? From the prior year, right? So this number is actually carried forward from the prior year. And according to the information given to you, you have written off the accounts receivable for 125,000. So now everyone look at this, please. For this, originally you estimated that 118,400 will be uncollectible, when in fact the amount of the actual write-off is much more than what you estimated. So here in this case, do we underestimate or overestimate the expense? What do you say, huh? Do you overstate or understate the expense?
Under.
All right, you underestimate the expense, right? So if you do the calculation over here, how much do you have remaining? Remember that originally you started out with 118,400 and then you reduce the balance of this by 125,000. So this is consistent with the questions that you asked earlier that Ajahn, in that case, you're going to have negative balance in the allowance. Remember that? You asked that question. So over here, if you take the balance, right, of 118,400, and then minus that by 125,000, okay? So you basically have a negative balance here for 6,600. So right now, you have 6,600 negative number. But what do you want at the end? At the end, you want it to be positive, and you want it to be 122,000. So it means that you have to first increase the balance to compensate for the negative balance. And second of all, you have to increase it further so that you have 122,000. Okay, so right here, hope that you understand the procedure. Now you have negative balance for 6,600. But at the end, you want the balance to be positive and you want the balance to be 122,000, right? So first of all, you have to increase the balance to compensate for that 6,600 negative number. And then you have to increase it further, right? So that you have 122,000 that you want at the end. So my question to you is, how much should you increase the balance so that you have 122,000 that you want? So how much is the increase? How much is the increase, Ka? So it's not going to be only 122, right? Because you have to compensate for that negative balance as well. So altogether, what is the net increase, Ka, altogether? So it's going to be 128,600, right? So what is this number, Ka? This number is actually the estimated doubtful account expense. Okay? So for this 128,600, it is estimated. All right. So for this one, okay, this is estimated or doubtful accounts expense or estimated credit loss. Okay. Now, if you have all these numbers, then you can take the numbers to the financial statements. The expense would then be 128,600, and the allowance would then be 122,000. So over here, again, you're given with the accounts receivable and sales. So you can take it to here and then do the calculation. So the net realizable value at the end, net realizable value at the end of year 3 would then be 1,403,000. นะคะ so คุณนนทนีคุณพ ภาวะริษาคุณกรองขวัญนะคะ คุณธนกร คุณนัชชา you have got the correct answer. All right, so now you take a break and then be back at 3:15. Kun Thanakorn, are you in a meeting? Okay, so let me show you how to do the calculation to get that number. I draw a picture here for you. So let's say that right now we have the beginning balance, right, of 118,400. Where do we get the 118,400?
We calculate it from AR gross multiplied by 8%.
AR of which year?
The prior year.
Okay, all right. So this is the amount actually carried forward from the ending balance of the allowance from the prior year. And then when we write off the accounts receivable, what happened to, if we write off the accounts receivable, what will happen to the allowance balance?
I don't follow.
If we write off the accounts receivable, what happened to the balance of the allowance? Do you have more allowance or you have less allowance?
More.
Okay, so we have to go back to this one, all right? Okay, so look at this, please. This is the allowance account, is that correct?
Yeah.
Okay, so when you write off the accounts receivable, when you know the fact that the customer has just died, has just gone bankrupt, or has just went missing, what happened to the balance of the allowance? Is it increasing or decreasing when you write off the accounts receivable?
Decrease.
Okay, the amount is decreasing, right? So over here, if you know that the write-off would cause the reduction, okay? So the write-off, right, would cause the reduction. So originally, let's say that you have 118,400 at the beginning, and then you reduce the balance by 125,000. So now, how much do you have after you write it off for 125,000? What is the balance that you have now? You're starting out with 118,400, all right? And then you reduce the balance by 125,000. So what is the balance that you have right now?
We have minus 6,600.
Okay, minus 6,600. Okay, now at the end of the year, right? At the end of the year, you want the balance of this allowance to be how much?
122,000.
Okay, and you want it to be positive or negative?
Positive.
All right. Okay. So right now, let's say that right now you have negative, right? 6,600. But at the end, you want the balance to be 122,000 positive number. So my question to you is, how much do we need to increase the balance of the allowance so that we have 122,000 at the end of the year? So over here, right, first of all, we have to compensate for this 6,600. So we have to add to compensate for that negative number. And then second of all, you have to increase the balance for another 122, right? So altogether, how much do you need to increase altogether?
128,000.
Okay, so this wouldn't be 128,600. All right, so now do you understand the calculation of this 128,600?
Completely.
Okay, all right.
Thank
you. So that's the picture to let you understand why we have to record more of the expense. So the thing is, everyone, if you underestimate the balance in the prior year, then this year you have to record more of the expense, right? To compensate for the understatement that you have made in the prior year. Okay, so it's okay to be over or underestimated. Then you make the adjustment in the following year. All right. Okay. Now, let's take a look at the second method, which is aging of accounts receivable. Okay. Now, for the aging of the accounts receivable, let's take a look at this accounts receivable. According to what you are given in the information given, at the end of the year number one, right? At the end of year number one, you have 1,350,000. 1,350,000. So this is given. What you need to do is you need to divide this 1,350,000 into age group. Okay. So according to the information that you have at hand, 820,000 out of the 1.35 million has not yet been due. And you estimated that 5% of that amount will be uncollectible in the future. And then for the second class of the age group, you have over here 250,000 out of the 1.35 million that has been past due for 0 to 3 months already. And you estimated that 8% will be uncollectible. And then 200,000 out of the 1,350,000 has been past due for 3 to 6 months already. And you estimated that 10% will be uncollectible. And lastly, for the last age group, you have here the amount of the receivable that has been past due for more than 6 months already. And the amount here is 80,000. And you think that 20% of this will be uncollectible. You may wonder, how do we get all these percentages, right? So these percentages wouldn't be taken from, again, past experience and also forward-looking information. And they can change later on if you think that the situation has changed. So from this given fact, you would then need to do the calculation for the allowance for doubtful account. So the allowance at the end of the period will then be calculated from this aging schedule. All right, so everyone please take the calculator and then we will do the calculation together. All right, now for this, you take 820,000 and then multiply that by the 5%. So for the first class, you get 41,000. You take that to the M plus. And then for the second age group here, you take 250,000 multiplied by the 8%. So you get 20,000. You take that to the M plus again. And then thirdly, you take 200,000 multiplied by the 10%. You're going to get 20,000. You take that again to the M plus. And then lastly, 80,000 multiplied by 20%, you take that to the M plus. So after you multiply the receivable with the percentages, you then put them all in the M plus, right? And then you press MR. So if you press MR, you get 97,000. What is this 97,000? This 97,000 is actually the amount of the allowance that you want to have at the end of the year. So from this calculation, you know that the ending balance of this allowance is 97,000. Okay, 97,000. And this is the first year, right? So if this is the first year, then there's no beginning balance. Okay. And according to the information given to you, for this first year, there's no write-off as well. Okay, so when there's no write-off, actually you can say no entry, right? Now, let me ask you questions. From this information given, how much should be the estimated expense recorded for year one? How much is it for the estimated expense in year number one?
97.
All right, so it's going to be 97,000. So this 97,000 is the estimated expense that you have to record at the end of year number 1. And at that very same time, you have to increase the balance of the allowance that you have. All right, so now if you finish out with the calculation over here, then I can show you the presentation on the financial statements. The expense here will then be taken to the statement of comprehensive income, and the allowance would be taken to the statement of financial position. All right, so in terms of the sales revenue and the accounts receivable, you are given with the calculation. You are given with the information. So after you put in all these numbers, you wouldn't know that the net realizable value at the end of year number 1 is 1,253,000. Now 1,253,000. If you finish with the notes here, you can then proceed ahead to year number 2 and number 3. I'm sure that right now you know the procedure of what you need to do, to do the calculation for the NRV. Okay? So it's really systematic, and it's the repeated steps every year. Okay? So it's a repeated step every year. Now repeated steps. Okay, so if you finish with this year 1, you let me know, please, so that I can move along to year number 2. Now type in 1, okay? So this is year 1, all right? So let me know that you are done so that I can move along and then show you the calculation for year number 2. All right, so if you finish up with this, then let me move along to year number 2. So for the year number 2, you know that the total accounts receivable is 1,480,000. This is actually from the given information. And again, you divide this 1,480,000 accounts receivable into 4 age group, and then you estimated the uncollectible percentage. As I have already mentioned, for these percentages, you can change the percentages if you see that the situation has changed. Now, if you do the calculation, the amount that you get from this calculation will be the ending balance of the allowance. Okay, so over here it's 111,000. Okay, so let's take the calculator and then do the calculation together here. 850,000 multiplied by 5%, you put that into the M plus, and then 300,000 multiplied by the 8%, you put that into the M plus. All right, and then 215,000 multiply that by 10%, you take that to the M plus, and then 115,000, okay, and then multiply that by 20%, you take that to the M plus. So over here, if you put in all the multiplication result, you press then MR. So you're going to get 111,000. Okay, what is this 111,000? This 111,000 is the ending balance of the allowance that you want. So may I ask you about the beginning balance? Do we have any beginning balance?
$97,000.
Okay, so over here it's going to be 97,000, which is carried forward from the prior year. And according to the information given to you, right, for this year number 2, the company has written off 100,000, right, of the accounts receivable, and that is debit to the allowance, credit to the accounts receivable. So over here in this situation, you underestimate the expense or you overestimate the expense. What do you say? You underestimate or you overestimate? Under or over?
Underestimate.
Okay, so you underestimate, right? How much do you have left? How much do you have left? You're starting out with 97, right? And then you reduce the balance by 100. So how much do you have left?
Negative 3,000.
Okay, so you have negative 3,000. And at the end of the year, right? At the end of the year, you want the balance to be positive and you want it to be 111,000. So my question to you is, how much do you have to increase the balance so that at the end you have 111,000 that you want?
100.
Don't forget, right? Don't forget that now we have negative 3,000 that we have to compensate, right, for that negative 3,000. So the amount is
114,000.
okay, very good. So the amount is 114,000. This 114,000 is the doubtful account expense that you have to record for year number 2. Okay, for year number 2. All right, so do you agree with the calculation here? If yes, then let's take a look at the amount that will be presented on the financial statements. The expense, obviously, right, must be presented on the statement of income, and the allowance is a contra asset, so it will be subtracted out from the accounts receivable, which is part of the company's asset. For the sales revenue and the accounts receivable, we know that from the information given. And over here, if we put in the amount, we then can calculate the accounts receivable net realizable value, and it's 1,069,000. You got 1,069,000. Okay, so you take the note here and then you proceed to year number 3. Work on year 3 and then type in the NRV นะคะ NRV for year 3 in the chat. Okay, so now I give you time, let's say 5 minutes. You continue on your calculation to year number 3 and you type in the answer นะคะ for the NRV at the end of year 3 in the chat. So 5 minutes given to you ค่ะ 5 minutes. Right, so let me show you the year number 3, all right? So for the year number 3, again, same logic and same step applying. You know that at the end of the year, right? The accounts receivable amounted to 1,525,000, and then you classify that into age group, and then you estimated the uncollectible percentage, right? As I have already mentioned, all these percentages can change if you think that the situation has changed. So over here, if you do the calculation, you're going to get the ending balance of the allowance, okay? So how much is the ending balance of the allowance? Can anyone help me identify this number, please? How much is it for the ending balance of the allowance?
132,400.
Okay, so it's going to be 132,400. Now, do we have any beginning balance carry forward from the prior year? Do we have any beginning balance?
Yes ครับ
So how much is it then?
It is 111,000.
Okay, so we basically carry forward, right, the balance from the prior period, and it's 111,000. So over here, from the information given, right, in the year number 3, we do have the write-off, right? Maybe the customer had just died or went bankrupt or, went missing, whatever the case is, right? But you write off his or her accounts receivable. So over here, the write-off is 125,000. So now, everyone, please look at this. Originally, right, you estimated the expense to be 111,000. But in reality, you write off 125,000, meaning that you underestimate the expense in the prior year, right? So if you do the calculation right now, you have negative balance in this allowance account. But at the end, from your calculation, you want the balance to be positive, and it's 132,400. All right. So my question to you is, if you want to have 132,400 at the end of the year, how much more do you need to record in the expense? How much is it that you need to record in the doubtful account expense?
146,400.
Okay, so it's going to be 146,400. Okay. All right, so hope that you agree with 146,400. Now, let me show you the presentation of the financial statements. So over here, the expense would then be presented on the statement of income, all right? And the allowance is a contract asset, so you subtracted that out of the asset, okay, on the statement of financial position. So over here, you are given with the information on the sales revenue and the accounts receivable. So from the information that you have at hand, you can then do the calculation for the net realizable value. So over here, the net realizable value is 1,392,600. So what Kun Krong Kwan has stated in the chat is correct. Okay, very good. So now, do you have any questions on this aging of the accounts receivable? Okay, so we are done with the method number 2. Okay, so I am now teaching you the method 1 and method 2 already. And then we have one last example in this chapter. So if we finish with that, we then will be done for the day. Okay, so if you finish with this, you type in 3, meaning that year 3 you are done with it. And then I will move along to another example, which is one last example. So do you have any questions about this method number 1 and number 2? Okay. Hope that you see that there's like repeated pattern, repeated pattern in the calculation. So hope that you can see the pattern and then you follow through that pattern. Hopefully you get the final answer. So have you finished up with the notes here? If yes, let me know. Then I can move along to one last example. All right. Now, let's look at this information given, and then hopefully we can do the calculation together to get the result. So this is one last example. Okay, one last example. For the information given, you have sales revenue, you have the ending balance of the receivable, and also you have the write-off. Okay, so what I would do is I would take the information given to all these calculations first, okay, and then we will determine the unknown. Okay. So over here, according to the information given, you know the sales revenue. Okay. So let me use the color of okay. So you get the sales revenue from the information given. And this sales revenue would, of course, affect the accounts receivable balance. So if you earn the revenue on credit, the accounts receivable wouldn't be increasing. Okay. And over here, you have the information regarding the accounts receivable. So let me take the accounts receivable at the end of the year to here. Let's say that I will be using this color. Okay. So over here, if you take the accounts receivable at the end of the year to here, you would also know, okay, you would also know the beginning balance. So for the year number 1, the beginning balance would then be 0. Okay. So year 1, the beginning balance would then be 0. Okay. And then for year 2, the beginning balance would be carried forward from the prior year, which is 2,650,000. And then for year number 3, the beginning balance would then be again carried forward from the prior year balance, which is 2,750,000. Okay. And according to the information given here, you also know the write-off. Okay. So the write-off not only affect the accounts receivable, but also will affect the allowance as well. Okay, so let me take the write-off to here. Okay, let me take the write-off to here. So right here, right now, the numbers that you can see on this are actually given. You haven't done any calculation. Okay, so all these are actually given. Now, what you need to do is over here, it said you would take 6%, right, of the accounts receivable, 6% of the accounts receivable to be the uncollectible amount. So what you need to do is you need to take this 6%, 6%, and then multiply that by the accounts receivable. 6% multiplied by the accounts receivable. Okay, all right. So 6% multiplied by the accounts receivable. Let me write it down over here. So I write it already here, right? 6% of the accounts receivable. So over here, right, you would also know the beginning balance, okay? So beginning balance for year 1 will be 0. And then year 2, you carry forward from the prior year. Year 3, you carry forward from the prior year. Okay, so this is the beginning balance, okay? Now, what I want you to do is, with this given information, right, with this given information, would you be able to help me with this expense in year 1? How much is it for year 1? How much is it for year 2? How much is it for year 3? So I give you time, and then you tell me the expense for year 1, expense for year 2, expense for year 3. I want 3 numbers. I want 3 numbers. Expense for year 1, expense for year 2, and expense for year 3. I give you time to do the calculation. Whenever you are done, you then type it up in the chat. I want 3 numbers. Expense in year 1, expense in year 2, expense in year 3. Thank you, Hela. All right. So for year 1, this is easy. For year 1, starting out from year 1, right? So this is easy. You basically don't have anything, right? So if you want the balance to be 159,000 at the end, then you have to increase the balance by 159. All right. Now for this, if you look at the amount, right, you basically underestimate expense. So you will have the negative balance before the adjustment. So you have to take that into account, the negative balance, and then you do the calculation. All right. So over here in year number 2, the expense would then be 181,000. And then lastly, you do the same calculation. This time again, you underestimate expense. So you would have to compensate for that underestimation and then record more of the expense. And over here, it's 239,000. So Hela, you do the calculation for year 3 one more time, all right? Okay, you do the calculation for year 3 one more time. You have got the correct answer for year 1 and 2. And then for year number 3, you do the calculation one more time, all right? Okay, all right. So if you agree, then we can move along to here, all right? So for here, we know the beginning balance, we know the sales made on credit, we know the write-off, we know the ending balance. So the only thing that we don't know is the cash collection. So can anyone help me with the cash collection? Again, I want 3 numbers. How much is the cash collection in year 1? How much is the cash collection in year 2? And how much is the cash collection in year 3? So help me with that, please. นะคะ 3 numbers นะคะ cash collection year 1 year 2 year 3. So after you get the answer, could you please type it up in the chat นะคะ I want 3 numbers. Cash collection in year 1, 2, and 3. All right. So over here, the answers that you get will be for year number 1, right? The cash collection is 5,350,000. How do you know? So you're starting out with 0, and then you increase the balance of the receivable by 8 million, and then you collect some, right, of the accounts receivable. But what you know is at the end, you only have 2,650,000 left. So the question here is, how much is the cash collection? So from the information that you have at hand, you would then know that the cash collection is 5,350,000. And then for year number 2, you're starting out with 2,650,000. And then you have the increase in the accounts receivable because of the sales. And then you collect some, right, of the amount. During the year, you also decrease the balance by 175,000 because of the write-off, and then at the end you have 2,750,000 baht remaining. So it means that you must have collected 8,975,000. Okay, so for year number 3, you do the very same calculation, and the cash collection in year 3 would then be 10 million. So any questions here for the calculation for this one last example? Okay, so if you finish up with the calculation, you can then take the amount to the financial statements. So over here, let me take the sales revenue to here. Okay? Sales revenue would be taken to here. This is actually given. Okay, and for the doubtful account expense, I would take them from my calculation over here. Okay? So from the calculation, I know that the doubtful account expense amounted to these numbers. And then for the accounts receivable at the end of the year, let me take the balance from here to here. Okay, and then for the allowance balance, I take the amount from here. Okay, so all in all, I would then do the calculation to get the net realizable value. And this is the net realizable value NRV of AR at the end of the year. Okay, so do you understand the calculation? Do you have any questions? Okay, so if you finish with the notes here, can you please type in any stickers or any emoji when you are done with the calculation, so that later on I can then show you the entries, which is one last thing for this chapter. Okay, so any questions on any of the numbers that we calculated? Anyone need more time over here, or you are done with the notes? All right, so hope you are done. Anyone need more time? Do I need to wait, or can I continue on now? Okay, all right. So if you don't say anything, then it means that you are done with the notes here, right? So let me continue on with the entry, which is one last thing, okay? So for this entry, I show you the entry for 3 years, okay? So for each of the years, you earn the revenue on credit, right? So if you earn the revenue on credit, you would then record debit to the accounts receivable, credit to the sales revenue. And of course, you would try to collect the accounts receivable if you can, right, during that same year. So over here, you then record debit to cash, credit to accounts receivable. And then during the year, if you have written off any of the accounts receivable, you have to record the reduction in the allowance and then record the write-off of the receivable. And then lastly, at the end of the year, you have to estimate the doubtful account expense and then record that as part of the adjusting entry at the end of the year. Okay, so these are the entries for year 1, 2, and 3. So you can see that it's a repeated process, okay, repeated process. So hope that you can see the pattern and the repeated process here for this chapter. Okay, so do you have any questions? If not, then that would be the end of today's session. So what I want you to do is work on practice 0401 นะคะ you work on practice 0401. Make sure that you understand this. And then what I also want you to do is that I will post present value and future value clip นะคะนะ I will post present value and future value clip. Please watch it before next week. Okay, so I will be posting the PV and FV clip. You have to watch it before the next week. So it will be something related to the chapter number 6 นะคะ I will show you the calculation of the present value and future value using the basic calculator, using Excel, using table, and also using BA2+. So in that clip, I will also teach you how to make use of that BA2+ as well. Okay. So I will be posting that for you, and you have to watch it before next week. So for next week, I would just assume that you have already watched that and you know how to do the calculation for the present value and future value. Okay, so if you don't have any other things, that would be all for today's session นะคะ So have a good day, everyone. Don't forget to work on the practice at the end of the chapter and also watch the clip. If I posted that clip นะคะ make sure that you watch it before next week class. All right, so if you don't have any other questions, then it's a goodbye. You may now leave the meeting. Okay. Have a good day ค่ะ